Well, many parts of the media, it seems, are cheering on an interest rate cut. They have been for months and months. Producers and journalists, it seems, have put their independent hats aside and are simply cheering with their own hip pockets. Now, this mantra has been taken up especially by Labor Party politicians, desperate for votes and willing to cash in on any whiff of populism. But the reality is Australia and even the government have a much, much better story to tell. And that's about the number of people who right now have a job. But the strong employment market here is one reason that rate cuts will eventually come, but not so soon. Now, somebody who's tried to explain this conundrum many times over is Phil O'Donoghue, the chief economist at Deutsche Bank, who joins me now. Phil, always good to chat to you. See, I find this a bit weird. People are almost cheering on rate cuts, and yet our economy right now, unlike other parts of the world, are not actually set and prepared for rate cuts.
Yep, no, not at all. Look, as you say, the labour market in Australia is significantly stronger than many of our peers, and indeed the last 4 or 5 months, it actually looks like it's strengthened a bit. That's a very good news story. The unemployment rate is going down, it's not going up. That's good for national income.
OK, so that's good for national income. The government makes more tax. The more people in work, the more tax the government takes in, the more it's got to be able to spend technically.
Yeah.
But the fact of the matter is, while the labour market remains as strong as it is, it puts an upward pressure on inflation through wages because the employment market is tight. That's what the Reserve Bank is highly conscious of.
Yeah, absolutely. That's the real conundrum we're facing here. We know that the RBA wants to see inflation getting back to target. We're about 3.5%. We should be back down about 2.5%. We've got about a percentage point to go. Right here, right now, the risks are when you're running 60,000 jobs every month, the risk is, are we really going to get back to 2.5? That's going to be a challenge. And the RBA, I think, are going to be very conservative. They're going to wait for some confirmation in that inflation data before they're shifting rates. OK,
so this is the reason why Australian interest rates by money markets, by economists, are not forecast to be cut anytime soon, not until perhaps next year sometime, while other parts of the world, say, for example, in the United States, another 0.25% rate cut, they've already cut. In New Zealand, a 0.5% rate cut is coming likely. Yes. In the UK, in Canada, another 0.5% rate cut. So they're well advanced in their rate cut strategy. Yes. Here in Australia, we haven't even started and are not likely to start for at least another 6 months.
Yeah, look, I absolutely agree. I think that's entirely right. It's interesting when you look at market pricing. The market is expecting Australia to follow our peers, as we often have done in the past. As you know, Fed, Bank of England, Bank of Canada, even New Zealand. Aggressive cuts are in play. Here in Australia, we're just facing a very different story. We have a central bank telling us that they don't need to follow peers, that inflation is higher in Australia, that the labour market is stronger. And as you say, look, I haven't got any cuts from the RBA until May of next year.
Until May of next year. OK, but I thought this was actually a part of the strategy of the Reserve Bank and even the government itself, and that was to have inflation glide down over 2 years or so to try and keep as many people in jobs as possible. A lot of people said it was impossible to do this. It had never really been tried by any major Western nation and economy in the past. But it kind of seems to be working. Yeah. People are staying in jobs. The inflation is drifting slowly lower. So why would anybody suddenly want to upend this? And even government ministers and others encouraging the Reserve Bank to cut. Why would we change when it actually seems to be working, even though we're not getting the rate cuts that other countries are?
Yeah, you absolutely. Look, what gets lost in the narrative so often is that interest rates are very high in Australia, and we see that acutely in the household sector because our mortgages are directly linked to the central bank cash rate. That is not the case in other countries. Cash rate in Australia is 4.35%. In all of those other countries we were just talking about, the cash rate went to at least 5%. So policy was tighter in these other countries. Now we're getting relief. The RBA took a softer path. Now, I know that's very difficult to deal with when you're facing a mortgage and your interest rates have gone up, but we actually never hiked as much as our peers. So, the other side of that is, well, we're actually going to have to wait a little bit longer before we get some relief.
Because, let's say, for example, the Reserve Bank had followed its peers and done the traditional thing that central banks do, and that is smash the economy with interest rates, get the unemployment up to 4.5%, 5%. And then all of a sudden asset prices start to crumble. Home prices start to fall. Businesses start to fall over at a faster rate. Now, the idea is if you take this glide path that they've taken, that a lot of that doesn't necessarily happen.
Yeah.
It's not to say it won't happen, but the risk of it happening perhaps becomes a little less on the way through.
Yeah, that's exactly right. It's very simple comparing and contrasting with New Zealand, which is really interesting. The New Zealand cash rate went to 5.5%. Unemployment in New Zealand has increased by about 2 percentage points from the post-COVID low. Here in Australia, we've got to 4.35%. The unemployment rate has risen by 0.5%. Very different path. The risk, though, I think, and I think this is worth highlighting, and what the RBA is focused on, we still haven't got inflation back to target. So as you say, the RBA is confident that we are moving in the right direction. But if that confidence starts to erode, the trouble for policy might be that we have to go again. I don't think that's going to happen, but that's the risk we're facing.
Because, and this is where there is danger, and that is if you have a lot of people in the labour market, and as we say, there's then pressure on wages to rise, or if all of a sudden people have jobs and something happens and people get their mojo back and start to spend in a big way and starts to push inflation again higher, that could prompt the Reserve Bank to have to go back and start again. And that could really be the sledgehammer that knocks the Australian economy around. Now, that's not the scenario right now. No. In actual fact, the Australian economy is kind of sluggish right now. That's the issue.
Yeah, and that is by design, and that is what we need to see. So we know that household consumption spending is very soft. Amongst the softest numbers we've seen for 30-odd years, that is a consequence of policy. Unfortunately, we need that to stay for a little bit longer, just until we get inflation back to target. Again, as you know, these strength in the labour market, other things equal, that means more consumption spending.
And there's one other riddle in our economy right now, and that is, as you talk about, a sluggish economy. It's going pretty much sideways or nowhere at the moment. And yet we've got a record stock market. Yeah. We've got house prices that have been all-time record highs, almost in some cases in both of those, in anticipation of interest rate cuts that, as you point out, may not be coming for at least another 6 months. That is almost like the problem, that the valuations of many of the shares and maybe even some of the house price valuations don't bear up with what the reality of what might happen is. Yeah. Look,
if I go back sort of 1 or 2 years, globally and certainly here in Australia, there was so much pessimism about the impact of higher interest rates. We thought that we would see consumption growth would collapse, that we'd see a massive rise in the unemployment rate. None of those things ever eventuated. Yes, it's slow. Yes, things have weakened, but not drastically so. We haven't seen a kind of a GFC shock to consumption. So I think, as you say, if we can manage to get rid of the biggest shock to inflation in 30 years with a relatively mild downturn in activity, relatively mild in the sense of, kind of a COVID or a GFC shock, then that's a pretty good outcome and pretty positive for businesses over the medium term.
OK, but this whole narrative about the interest rate cut whenever the first one does come plays into the election, the federal election, because the government, in a sense, wants to take some credit for having brought interest rates down. Now, according to your theory and your first, sort of forecast of an interest rate cut in May, that's after the election. So this is the timing that is going to be important for both the government and the coalition going forward.
Yeah. Rate cuts will come when the unemployment rate is weaker. When the unemployment rate is higher, I should say, when the labour market is weaker. And to your point, a good consequence of the strength of the labour market is that people have jobs. That's keeping consumption stronger. That's keeping national income higher. So, that's going to be interesting to see how next year plays out. Certainly, there is a chance that we get an earlier rate cut. We would need to see inflation data weaker than I'm expecting, I think, for that to happen. But for mine, I don't think we should expect much rate relief until May. The second quarter of next year.
It's funny, because my gut feel is that maybe politically, maybe from even a media point of view, it's easy to actually sell a rate cut and take credit for a rate cut with the community than it is to actually explain that more people having jobs is actually a good thing for the economy and a good thing for those people as well.
Yeah, for sure. The thing with our interest rates is that you see an immediate impact. If you have a mortgage, you'll see an immediate cash impact, immediate cash relief. You can identify it, it's nice and neat and tidy. So, I can understand that, that narrative at a political level. But, the economy has to be in the right place.
Phil O'Donoghue, great to have you on the program. As always, many thanks for your time.
Thanks, Ross.